So it's Friday, December the 18th. This is our last broadcast of the year of 2020. Mallory and I will both be obviously taking Christmas and New Year's Eve off. We'll be back here. Show you that calendar in just a second. A couple things I wanted to talk to everybody about. First off, this would normally be a time where we worry about IRS, RMD, required minimum distributions. This year, if you haven't heard, that distribution is suspended because of the virus. So if you have an RMD, you're worried about it, please don't worry about it. There's no reason to panic. And a lot of people tend to think of that the last week and go, my gosh, I haven't done this. But this year you get a pass on your RMD on your IRA accounts. So that's actually awesome. As far as we know now, there'll be no any kind of make-up calculation next year or anything. You'll just go back to the typical numbers. This year, the Federal Open Market Committee with Jerome Powell as chair met for the last time of the year. They're continuing to stress that there's going to be a little resistance in the economy going forward. They think, the Fed thinks that they're going to have to stay involved in as far as buying treasuries and buying some of the other things that they do to keep the market short up. They also are reaffirmed the interest rates will going to be kept low. And they also stated on Wednesday that they think that they're going to need Congress to step in and help Americans and help small American businesses get through this. So that's the tack that they're taking. Their estimates for GDP growth that they put out on Wednesday are a little bit higher than they've been before. They had been at 4%. They raised that to 4.2 for 2021. That's a good sign. In addition to that, they've lowered their unemployment estimates where they were expecting low unemployment to be 5.5. They've said they think we'll end 2021 at 5.0. That's actually really good news as well. Overall, they think that the vaccine introduction is going to ease some of the downward pressure on the market. And I'm going to add to that in a second. Jerome Powell's term ends in February and he'll be replaced. This is a typical system. And right now, the front runner is Lael Brainerd, who had been involved in some of the things before. She'd been candidates for other positions in the government. She became a member of the Board of Governors in 2014. She's got some experience. Her education is economics. She's incredibly bright. And so right now, she's the front runner that would take over as chairman of the FOMC in February. So let's talk about the vaccine for a minute. We don't want to get too excited about it. We have two now available. Moderna was approved yesterday for distribution. What we have to remember, I think it's really important, is that on the vaccine, there's one vaccine, and then for the Pfizer, you've got to go back 21 days later to get the second part. And from Moderna, you've got to go back 28 days later and get the second part. Without those second parts, they're essentially ineffective. And if you go back and read the study, you're going to find that they found the second application was actually an accident. Someone had not given the full dose. They went back and redid it, and they found that that was incredibly effective. So what I'm worried about, my concern, or concern here in the office, is that people will go for the first one and then they won't go back for that second, let's call it a booster. And if that happens, they don't go back, the vaccine's ineffective. The other part that we're worried about, and we've got to keep cognizant of right now, is while it's great that the vaccines are available, let's not forget that we have 360 million people in the United States. We need to see 70% vaccinations to hit what's called herd immunity. And right now we're looking at 2 million doses available. So we've got a long way to go, and we don't want to kind of give up the boat and say we're all okay. So let's get into the basics for this year, this last show. This is the Dow, and you're going to see we have a little bit of an issue over here on the far right-hand side where we're kind of starting to flatten out. We were up 148 points yesterday, but our moving average, our daily average, and the 7 and 14-day moving average, they're starting to kind of flatten out. And this is something that what we're doing, we keep an eye on. It doesn't mean anything. It just means that we're waiting for it to either lose power or maybe it's taking a breather, it's going to take off again. But it is something we're keeping an eye on. We did not, and we will not see anything called a Santa Claus rally, which we typically see. But I think that probably has been more often than not, maybe half the time it exists. This time it was replaced with the rally after the election. We clearly had that. So I don't think we're going to see much more the rest of the year. We're at 30,300. I recall my forecast was the Dow would be at 30,000 by the end of the year. I'm kind of hoping we hang on to that. My other forecast, the S&P 500, I said 4,000. We're at 3722. So we'll see how that goes. But right now, it should be a quiet couple of weeks till we end the year. This is the labor data today. I try to focus on that a little bit. And you can see that black line up and down is the election day. We had that really big rise. And then on this chart, you can also see on the far right-hand side, that flattening I talked about for the actual daily movement, the 7-day average and the 14-day average. They've kind of flattened out, and we're actually seeing more of a conversion of the three lines that we've seen all year. So there's a couple of good things about that. One is that it's telling me that volatility is decreasing. That's good. And the other part, it's telling me that the market's kind of stable, set volatility aside. We're seeing some stability, and maybe it's just taking a breath. And so I need to panic about something to watch. On the next one, we have unemployment. Now, here's where we have a little bit of an issue, and we're paying a lot of attention to it. The unemployment went way up this week. It shot up to, I think it was 880,000. Yesterday was reports. So we'll wait a couple of days and they'll modify that. They'll modify it next Thursday. They'll modify it the final Thursday. And so when we come back in 3 weeks, we'll see a more precise view of how the year panned out. But that rise in unemployment was a little concerning for us because you typically wouldn't see that between Thanksgiving and Christmas. You see more hires usually. And obviously in the service industry. People are still shopping, Amazon's still shipping. There's a lot of companies still doing internet work. So it's a little concerning to see that number come up, and we'll have to pay a lot of attention to it. It didn't come up enough to affect too much our moving average. So just as a week-to-week movement, it's something that we're really paying attention to, and we'll see how that pans out as the year ends. These are our world markets as they ended last night, and if you look down, you can see, recall that last week I said something my concern right now was a recession in the UK and how deep that would get, and oddly, UK was the only one that did not have a good week on their markets this week, but they were only down about 0.9%. That's not too bad. Everybody was up, and then if you go to the far right, you're going to see 2020 year to date. Japan is back up. We talked about that last week. Germany's now gone up for the year. And then obviously the three United States one, NASDAQ 42.3. That's just an incredible year. That's a very information technology heavy index. And generally the consensus is we will not see that again in 2021. We've seen a lot of technology grow, and our consensus is that it's going to keep going, but this rate is just probably not sustainable. That 6.2% of the Dow is nice, but the number that we really like as a benchmark is that bottom S&P 500, which is up 15.2% for the year. The interesting part about looking at these numbers, especially if you focus just on the United States numbers, is if you've asked most people how the market's done, they're going to tell you it's really gotten beaten up. The fact is the market's done pretty decent. We had a bad March, but we came out of it. And so we're going to end the year in positive numbers, most likely on all of our indices. And considering what we've been through, that's excellent news. So this is good to see, and in 3 weeks we'll see that updated in the final version for the year. This is our these are our sectors, and again over on the far right hand side is 2020 year to date, and you can see the big winner is telecommunications, but you've also got consumer services, consumer goods, industrials, technology have all done well. The gas and energy, everybody knows that's way down. It's been a tough year. And here, from our point, is that it might be time to start getting a little bit more into that because they have gotten beaten up pretty bad. But look what that gas and energy has done since 325, which is the bottom of COVID, to today. It's up 45%. So it's made a nice recovery. Year to date, it's still down 34%. It had a long way to go. So it's something we're paying attention to. And Mark Glenn, my partner, and I will be sitting down and we'll be doing some sector analysis and rebalancing the sector focuses between now and the last day of the year. And we'll be implementing some of those changes on January the 4th, but our changes are going to be small. We're not expecting a lot, but what we're paying attention to is how these sectors have performed or where we think we're going to go next year. So here we are with the Volatility Index. And this is a measure of obviously volatility as we see it. You can see back in March, it was just not off the charts, but pretty darn high. And it's stabilized a little bit. Right now, it looks like we're at about 22 on the index out there on the far right. And just like the Dow average, those three lines have started to converge, which tells us that there's some stability and things are kind of quiet. And that's kind of what we'd hope to see the last couple of weeks of December. The key is going to be what we see on January the 30th and see if anything's picked up a little bit. And this is our SWOT. We introduced this a couple of weeks ago. I've highlighted the areas that I'm concerned. I want consumer confidence. The volatility index has done well. I'm a little concerned about consumer confidence as we go forward. There's going to be some issues with the new administration. There's issues about vaccine availability. Those are the things that I kind of am highlighting. Let's really pay attention to those. It's been good, but I'm watchful that it may fall off. Discipline is important. We saw some volatility in disciplined investing, some issues with some people being concerned, wanting to get in and out of the market. The strength is not doing that, and we can show that over and over again on sticking with your plan, and that's kind of what we do here. On the bottom, I've added the things that are of concern to us: business spending declining, consumer spending declines, and the consumer confidence in the vaccine wanes. Those are things that in the short term, over the next quarter, maybe 2 quarters, we'll be watching really close. And then on the far right-hand side, a fear of weakening economy. That comes from people reacting to what's going on. A virus not putting check, that's making sure that everybody gets that second vaccine. That's making sure that everybody gets the vaccine when it's available. And then the economy weakens either through shutdowns or hopefully we don't follow what California is doing right now. California's got a real problem with COVID. And so how they deal with it is going to kind of direct how everybody else goes. It's just a huge economy, and we'll have to see what that happens. But those are our strengths, weaknesses, opportunities, and threats as we see those lining up for 2021. This is our calendar for the next couple of weeks. Christmas is 1 week from today. And I'm a little concerned, a little disturbed that the temperature on this Tuesday, the 22nd, is going to be 60. I don't know if that's 2020 getting back at us or what, but I know Santa really likes snow, and he isn't going to see it this year in this part of the country. On 31st, that's New Year's Eve. We will not be here on New Year's Day. And then Thursday, January 7th, we'll be back the next morning on January the 8th. And we'll be doing our 2021 thoughts, where we think we're going to go in 2021, some of our ideas. Next year, we're going to bring in a couple of different guest speakers. One is going to talk to us about fixed income. We're going to introduce Mark to you a little bit, and we're looking forward to an exciting year. So tell your friends and family that we're here. We're here every Friday morning, starting on January the 8th at 8 o'clock in the morning. It only takes about 15 minutes. We'll tell you everything that we can and try and give you some insights into what the markets are doing. Have your friends give us a call if they have questions. This is a great time of year to review portfolios. It's a wonderful opportunity to take a look back and see if you have any capital gains to take advantage of, any losses that you want to offset, and make sure that your portfolios are aligned for the coming year. The economy will change. Jerome Powell has said that a couple of times in the last 6 months. He's reinforced it this past Wednesday that as this economy recovers, and it is recovering, things are going to change. So you want to make sure that what you've got in your portfolios work for you first. And second off, try and work with the economy and what we see is going on forward. So thanks for joining us, Mallory. My great thanks to Mallory for being here this year. She's been a great producer. She just sits there and presses buttons and makes things look great, and it's awesome. She puts it together, and I don't get it to her until late Thursday. So she does a super job, and I'm really grateful to her being behind the great big blue curtain. So Mallory, thanks very much. Have a great Christmas. Everybody enjoy your Christmas and your New Year's. Drive safe, enjoy each other's company, and we'll see you again 3 weeks from today. Happy holidays.